Presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. This is Larry Pesavento for TFNN's Commodity Hour, and we're going to have Rich Anderson from Anderson Capital Management on in a few minutes because he's pretty close to these things that are happening with MF Global, and they have these big names that they're using now, like rehypothecation. I mean, they never used names, big words like that. When Rich and I started, everything only had to have 4 letters or they wouldn't let you in the building, but it's a lot different now. I would like to start the show today about one of the things that everybody likes to look at, and that is the silver market, because we have come down to the 786 retracement of that September low. And what I've done is I've put in for the Tiger TV people the SLV, the ETF for silver, and I wanted to go through that because back in February we had a big move up, and then we had a little bit of consolidation, and then we started the parabolic move in silver from 33 to 49, and we measured that time frame between the time up and both of those moves, and it came within 2 days of the exact high. And at that time we were watching the open interest very closely and also the volume, because the open interest had been decreasing on that up move, which told us that people were leaving the market. And so where we stand now, and the reason why I'm bringing this to your attention today, is I checked the open interest figures for both silver and gold, and they're at very, very low levels, far, far lower than we were in April. The volume in silver at that time was well over 150,000 contracts up in April, and the open interest was about 165,000, and now we're setting with open interest at 98,000, and we also got the volume at a volume at 86,000 and open interest at 98,000. And then we're going to do gold later because it's doing the same thing. But I've got Rich on the line now, and I wanted to ask him a question about the MF Global situation, and then also about this recent sell-off that we've had in commodities. Are you there, Rich?
Yeah, I'm here. Hey, Merry Christmas, Larry.
Merry Christmas to you and your family. And Rich, I don't know what that word rehypothecation means, but it sure sounds important. Is it as important as people say it is?
Well, it's been going on forever by all the firms. You know?
Well, I knew that, but I mean, I don't think it means very much, does it?
No. It's just something that's been going on forever. The real facts are that we have people testifying saying that they know nothing, and you can't run a firm not knowing what's going on. You know, they had they had to know.
Yes.
And supposedly there was another batch of money that was coming out. Initially they sent out like 60%. Now I hear they're sending another 10 or 12%, although I haven't seen any clients that have gotten it.
I haven't seen anybody get anything. One person, yeah.
I have friends that do, and I haven't seen anybody get additional money, and they were getting some this week. But this has kind of been a train wreck. I mean, the sell-off you're talking about in gold and silver, you know, a lot of hedge funds had positions with these people, and all of a sudden, you know, they 50% of their capital is gone. They've had to liquidate. But in my opinion, what was going on yesterday was that they were worried that Europe was falling over the cliff, and people are liquidating. You know, 5 of the European banks got downgraded, and some of these banks have gold as collateral, and I think they were selling some of their gold to raise capital.
So it's margin call related.
More or less, because you know, if you're a European bank and all of a sudden you get downgraded, you're now in a different tranche, and you have to have a greater capital requirement. You know, it's kind of like the difference between being a hedger and being a speculator. Hedger has a lower margin than a speculator. Well, a downgraded bank has a higher margin than the top tier bank.
Yeah, I understand.
And they sell whatever they can, and gold is easily sold.
Mm-hmm. What do you think about what's happening? Corn is at a major, 618 retracement now on the weekly charts, and wheat is very, very close to that, and soybeans are also, and we've got some some seasonal things that say, this is time you want to start to be looking at the grains, after all the harvesting is in and everything. What's your opinion and your feelings on the grain markets that we're looking at right now?
Well, I think first of all, the next big report is January 12th, and that's the next fundamental injection that could help any of these markets. We've basically had a good wheat crop around the world. Wheat can be grown in 5 different continents, and there's been a decent crop everywhere. The corn, it's still a U.S. crop, some South American, but really it's U.S. The ethanol demands remain steady. They actually have some decent margins because oil prices have stayed relatively high until yesterday, but they're still basically good. But the key thing that's going to drive it is weather. Weather at this time of the year in South America, they're starting to talk about some dryness down in parts of South America. If they were to continue to stay dry and expand, that would be a big deal. It's going to take something like weather or a surprise in the January 12th report. And, the government, every agency has cut back, including the agricultural department that makes these reports, and that's why these reports are sometimes surprising, shall we say.
That's the understatement of the year. Rich, you and I have been in this business, and we've been friends for almost 100 years combined. And if you had to pick one thing for the folks to look at over the next 3 to 4 weeks to buy or sell in the commodity markets, what if I put your hand on the stove for a few seconds? What would you say? You had to put, say a little bit of your own money in it. What would you be looking at?
I'd on my radar screen. Well, mostly I do spreads for myself, but on my radar screen would be cattle, because we're going to have probably 5% less than a year ago. You can't, unlike poultry or even pork, you can't just turn on the faucet and all of a sudden create a whole bunch more cattle. That's an expansion project. It takes 3 to 4 years to bring any numbers back. And with all the drought we had in the Southwest, there was continued liquidation. So I think that's where the value is. But even there, you kind of have to wait for the seasonality, and the real demand probably doesn't start until the second week in January. I think the prices are cheap enough, but I've kind of got 116 on my radar, and the Febs is kind of my area where I like them. I think the corn 565, 575 March is kind of on my radar. The crop report on the 12th will make a big difference, and the weather in South America, it will be the driving force. It's going to take weather to make this thing go. By the way, one of the interesting things, supposedly somebody's come up with a way to develop synthetic potash, which is a big fertilizer used in agriculture. And if indeed this is an effective replacement for actual potash, it'll make a big impact on companies like Mosaic, and I think there's a company also called Potash. But anyway, and it could cheapen the input cost for the farmers. The analysis by a lot of the fundamentalists is that we're going to grow a huge grain crop of corn next year, but the additional acres that, if they plant them, are going to be acres that are not the best acres. They'll be acres that don't give you the maximum yield, number one. And number two, the insurance price is set in December and February, and the December peg is much lower than a year ago. And if the February price is lower, there won't be the motivation, because you're talking about putting hundreds of dollars per acre in the ground. And if your insurance isn't cover that, last year covered it more than enough, but this year it may not cover all the money that you might have to put in the ground. So where's the motivation to really plant fence row to fence row?
Yes, I can understand
from
that.
An economic standpoint, as a farmer, and I am a farmer in South Dakota, I mean, that's where they're doing their penciling right now and figuring out, this is how much it's going to cost me to plant an acre, and, is it worth it?
So your costs are going up each year just because of the thing put in the ground to get the crop to grow.
Right, and the crop guarantee is based on a price that's set from the December prices and the February prices, and we're low right now, and if February's the same or lower, that may not cover all my input costs. In which case, I'm not going to be that keen on doing it. I'm pretty confident we'll continue to find some weather story in South America or a weather story here in the United States. Here in the United States, it won't develop until, April, May, or June, but South America can easily develop in January. Mm-hmm. So I have my support levels. I'm looking to accumulate. But these hedge funds have had a hard time making money this year.
That's the understatement of the year.
so a lot of them have gone to cash. Everybody's nervous. Mm-hmm. It's been a challenging year, to say the least.
Well, this nervousness, I think we've seen as far as seeing more volatility, but this is what happened in 2008, but people were not expecting it in 2008. I think now they are a little bit more hesitant about doing things because, this thing with MF Global has really bad ramifications for our business, and we hope we get it, straight before, because I've been in this business, ever since I was, right out of high school pretty much. And, this is the first time we've had something like this where the funds were not available right away, and now the missing funds, and when these people get on and, give it this rhetoric, well, I really don't know. And like you said when you started, Rich, it's impossible to run a big firm without knowing where it is. You and I know these people like R.J. O'Brien and Rosenthal Collins and Saul Stone. I mean, those guys had skin in the game all the time, and they signed the front of the checks and not the back of the checks, and so they knew where that money was, and they were all straight shooters and made sure that everybody had an equal say and everything. But MF Global is an old offshoot of Refco, isn't it?
Right, it's an old offshoot of Refco, and the way it works, if I'm the CFO, by 11 o'clock in the morning, and this is the way it works at RJO, is a clearing firm I use, but at 11 o'clock in the morning, they know how many checks they've sent out, and they know what their haircut is that they have to put up with the exchange, and they know what their excesses are, and and that's the money they're going to reinvest overnight.
Yes.
By 11 o'clock in the morning.
Yep.
MF Global is run the same way.
They're all run the same way. They have to.
They don't. Yeah. They're not being truthful.
Yeah.
It's defying credibility. It's suspension of disbelief is what you have to have if you're going to believe that he actually didn't know. But the volume isn't just down on the commodities because of this. The stock volume hasn't been very good either. And these guys are coming to the end of the year. They're closing their books, and they're looking at, how much are we going to have to send out.
Okay, Rich, hey, listen, thanks a lot, buddy. And we'll have you on right after the new year, and I want to wish you and your family a happy holidays and a happy new year, okay?
All right, take care.
Okay, thanks a lot, Rich.
Bye-bye.
Okay, we'll be back, folks, after the break. 877-927-6648.
Are your cable rates rising? Tired of being pushed around by your provider? It's time to push back. Cut the cable and get Dish Network installed with absolutely no equipment to buy. Here's the best part. Packages start at just $24.99 a month for an entire year. That's right. Call now and get Dish Network installed free. Plus your choice of HBO, Cinemax, or Stars free for 3 months. If you call in right now, Dish Network will also throw in free HD for life. PMG Dish, a Dish Network authorized retailer, is waiting for your call and can have you watching TV as soon as tomorrow. Call 800-565-8010. Imagine all your favorite movies, sports, and shows in crystal clear digital quality for far less money, and you won't have to deal with the cable company anymore. At only $24.99 per month, they're practically giving it away. Call now for full details. Call 800-565-8010. That's 800-565-8010. Again, 800-565-8010. Limited time offer, prices, packages, and programming subject to change without notice. 24-month agreement required. Cancellation fees, auto pay, and paperless billing and other restrictions apply. Call for details.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Hi folks, Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Give the gift of silver this holiday season. TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks. Just a simple drawing allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details. Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and this is Larry Pesavento for TFNN. If you have any questions, it's 877-927-6648. And we want to talk a little bit more about the gold and the silver because I think we're at very critical levels. Now, gold took out yesterday's low by a few cents. Silver did not, and silver's low yesterday was exactly the 786 coming off of the September low. The gold went, of course, below that level. Now, if you're looking for a low-risk trade and you're bullish silver and you're bullish gold, I think that the best place to buy right now would be to buy the silver. You could buy the SLV and just put a stop like 50 cents under where it's trading right now, because if it goes below there, you do not want to be long. We've had a much lower low in platinum today, which is also continuing bearish and looks like has another $100 announced to the downside. And we're looking at platinum at a discount to gold of $170 an ounce, folks, and it used to sell at a $300 or $400 premium or more. During I think it was much more than that. I think it was an $800 premium, as I recall. Yes, it had to be because it sold for $2,800 an ounce, and gold got to $19, so it sold for almost $1,000 premium. Now it's a $150 discount, which it's never been before, and that could be related to the industrial use or whatever it is. But the important thing to look at today is the fact that silver did hold the lows of yesterday, and it was an exact 786 retracement of the September low. Gold went a little bit below it, but still in the ballpark. It's got to close good today. If it closes below 1560, I wouldn't touch silver or gold, either one, because it looks like we still have more to go on the downside. We're getting a little bit of a bounce back rally in stocks, which we talked a little bit about that on yesterday's show. In fact, about when we were mentioning the theory of runs and how markets don't go down more than 7 days or 8 days at the very, very most. and then they actually turn a little bit. But it's just actually a quiet bounce. I wouldn't expect more than just a few days of a retracement here, if we do in fact get that, and that's still up in the air. We had the same thing happen yesterday. The market looked like it was pretty good, and at the end of the day, bada bing, bada boom, it was all over. So the main thing that we have to be watching now, and not just because it's the commodity department here, but it's also the fact that a lot of people are interested in silver and gold. We're getting really low readings now in open interest and volume, and that's when buyers will start to nibble for this stuff. And so this is why we want to watch it real closely right here. It's the exact opposite of what was happening in April when we tried to explain to you folks that this drop we were having in open interest as prices were going up was very bearish, and that parabolic move was not bringing in new buyers. And now what's happening is we're down, and everybody is getting very bearish. Silver, they're giving a lot of reasons why silver and gold are using words like rehypothecation and whatever that means. It just means borrowing is what it really means. And so this is what we have a situation now. And the reason why I'm bringing this to your attention is because I follow one of the things I do for the hedge fund is I follow the cycles of the things that we're watching most often. And one of the big cycles that we watch are the longer term cycles in commodities. If you remember, yesterday's show, I put up a big chart on the CRB index called the CR from Bloomberg, and it showed the fact that we had this big Gartley that formed way back in May, and now we've been coming down quite a bit for considerable length of time now. And this is a chart that goes back to 2008, but we're at a very critical level as we come into this week. And the reason for that is if we take a look at the DBA, which is the ETF for commodities, basically wheat, corn, and soybeans and sugar, some of the growing ones. It doesn't have the gold and silver and things in it. But if you take a look at this, if you get a chance to go into Tiger TV, you'll see that it's a very, very liquid and volatile ETF. It follows the numbers beautifully. After our high in 2008, we made a perfect 61% retracement on the weekly chart in early February of 2011, and we've been down ever since. But the important thing about this is that we are setting exactly at the 61% retracement of the previous low last June, and that's an 80-week cycle. So we need to talk about that a little bit more when we get back. We want to break this down and go to the daily, and then I thought what I would do is to pick out one of these commodities in the DBA for a recommendation.
This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the fourth quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and we have a caller from Denver, Colorado. Are you there, Mark?
Yes, how are you?
I'm good, thank you. What can I do for you?
I have a question that seems kind of perplexing me. And it's about the VIX. And the VIX is at levels right now, after our down move, that are similar to when the market was at its recent highs. And I'm wondering what your thoughts are on that and why there's no fear in this marketplace.
I don't know why there's not any fear, but I think they ought to have a complacency index because I think that's what's happening to some people. They're just getting tired of the volatility and they're not really moving around very much. But I do look at the VIX, and it is perplexing because, we should be at least testing, last week's high, like we did in the lows for the stock market, and yet the VIX is just barely doing anything. And so my assumption is that it'll either move quickly in one day or it'll just be in a period where it goes sideways for a while. Yeah, I think people are getting frustrated. I can see it, when I get questions in emails. They're saying, why is it that I have a profit in a stock on one day and then 2 days later, it's all gone, and that's mainly because of the volatility, that we're having, in my opinion.
Right, we're having volatility, but it's not showing up in the VIX.
It's not showing up in the VIX, and part of that is not a lot of people trade that. I mean, it's pretty liquid and everything, but
isn't
they're
it based
not
on like the put call index or something like that?
That's exactly what it is. It's a way of measuring fear and greed in the market, and sometimes it works better than others. It follows the pattern sequence quite nicely, but right now it says that you should be selling stocks, and then we've only had a little bit of a rally, so
right.
I'm not sure that's the right thing to do, but we'll have to wait and see.
Okay, and then what are you looking for as far as the next, I mean, some of the folks seem to think that we've hit a low in the last couple of days, but a cycle low. But my thought was more it was going to be closer to the end of next week. What do you think?
Well, I think the low should. My feeling is this: we made a bottom on the new moon to the exact day. We made a top on the full moon. One was a solar eclipse, the other was a lunar eclipse, and we've got the new moon coming in on Christmas Eve. That would make a perfect rubber band effect. In other words, down, up, down into Christmas Eve, and then after Christmas Eve, we would start what they call the January rally. And then we'll see what happens. But I think the thing in Europe is it's always going to be on something in the news because they need something to talk about. And then there'll be something else that'll come up, either something different than MF Global. There'll always be, something come in to stir the mix up a little bit. And then there'll be some positive things too. But we're still in a bear market, Mark. I mean, we've got lower tops, lower bottoms, and China was supposed to bail us out. And I posted that China chart, yesterday when we talked, and I showed everyone that this thing has. Not only has it been, in a bear market, it's been in a really a bear market, and we're way below the October and November lows, and we're looking at the same thing is almost ready to happen in Hong Kong, and so we're certainly oversold in that, and we could get a nice rally, but China is in a major bear market, and they're not going to bail anybody out. They're going to have a hard time just keeping their ship afloat.
Right, and it's looking like our bounce today is on about half the volume as our down move yesterday, so it's not giving not a whole lot of.
Well, now the volume mark at this time of the year actually slows down quite a bit because of the Christmas holidays, and it starts around the 14th or 15th of December. When I worked at Drexel Burnham years ago, can you stay with me, Mark, and I'll talk to you a little bit about what I know about volume. It's not enough to consume a lot of time, but I'd like to talk to you a little bit more. So hang in there.
Okay.
Give the gift of silver. This holiday season, TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back with Mark in Denver. Mark, I wanted to mention to you, the Christmas season is upon us, and it was around this time of the year every year that Wall Street really starts to have parties, give their bonuses out, and everybody's really in a pretty much of a festive mood. Even whether it's a bull market or bear market, they still do the parties and they still pass out the money. And Hanukkah comes, on Tuesday, so we have Christmas and Hanukkah in the same week, which is very unusual.
Yep, I deal with that with my family.
Yes, I know. Well, when I was at Drexel, we had 26 retail brokers. We had 23 Jewish brokers, 2 of which were rabbis, and then myself and Jim Twentyman were the only 2, non-Jewish people. So we had a huge Hanukkah celebration, but the Christmas celebration was even bigger than the Hanukkah celebration because of all the the little kids, and it was really quite fun every year. So that's why it's slowing down. That's the main thing.
I just thought it was kind of telling that yesterday, just looking at something simple like the diamonds, we came down on over 10 million shares, and today it looks like at best we're going to do 5 million on the way back up. So I just think that was kind of interesting.
It's looking more and more bearish all the time. That's all I can say. If you look at all the countries, if you look at Asia, you look at Europe, and you look at where we are, and the thing that, I think the final thing that's going to, make it really get bad is when the bonds finally top and interest rates start to go higher and instead of lower, and then it's really going to, when money starts to get scared, then those bonds will be, I think, because there's nothing more than a piece of paper, but we'll have to wait and see. Anyway, happy holidays to you and your family, and thanks for calling in.
No worries, bye-bye.
Okay, folks, now what I wanted to do is to try to give you another trade. We take a look at that silver, whether that's going to work or not, I don't really know. But if we look at the DBA, which is the ETF for these commodities of wheat, corn, sugar, and soybeans, you can see on that DBA chart into Tiger TV that we've made a 61% retracement off of the June of last year's low. That was all part of that weekly chart that I had posted earlier. And then if we take one of the main things that is in that particular group, which is the sugar, corn. Sugar is one of the main things. It's one of the more heavily weighted things in the DBA for that. And what we're going to do is we're going to take a look at sugar on the longer term chart here, which is the daily, and you'll be able to see that we are setting right now exactly at the 786. We've been here 2 days in a row at $22.84 a pound. So that's what I think is a very low risk buy on sugar. 22,000 pounds. So the margin is not very much. Each penny in sugar, each cent is worth $11.20. So if you risk just 40 cents, you're only risking about $400, and it could easily, move 2 or 3 cents to the upside on a short covering rally. So it's at a place where it has very, very low risk. The pattern is there. The cycles are there. And, whether it holds or not, it's no different than silver or gold or any other. Some of these just don't work. But, this is the type of pattern that you have a risk-reward ratio, very heavily weighted, in your favor. And it follows the numbers, quite nicely. So this is the spot if you're interested in being long something over the holidays that has a positive bias. And I would think that the buy on sugar here at 22.83 with a stop at 22.43 would be something to take a look at. But remember, you have to put a stop in because this doesn't necessarily mean that it's going to stay at that spot. So we are, we're in that level where it should hold. But like we've said many times, and Steve Rhodes talks about it, the money management is more important than your trade selection. So you have to be able to be sure you put a stop in it. And if you wanted to be really safe, you could wait for a day or so to see that this low holds, and then try to enter on a small pullback or buy it a little bit higher, knowing that 786 level from last year's May low, this year's May low is going to hold. So that's pretty much what I think as far as the silver. One of the markets that I spoke to Rich about that I wanted to talk about, and that is the corn market, because that's the United States grows 40% of all the corn in the world. The rest of it is grown in pretty much South America and a little bit in China, but it is the largest agricultural crop in the United States, and we grow, like I said, 40% of the world's corn. So it's a very, very large market, and we have broken down below the 786 retracement. If you remember last May when we were talking about the market, the whole world was wanting to buy corn, and we were making a huge 3-drive to a top pattern in May of last year, which was when they were getting ready to plant the crops. And then we had a huge break, and then we had a big Gartley sell pattern that came in up at the 786 level, and that was at $7.79, and now we're $2 a bushel under that. That's $10,000, folks, $5,000 a bushel in corn. And now we're breaking down, and we're very close to the October lows. And the $64 question is whether it's going to hold or not. And so on this particular one, it's different than sugar, because sugar is still holding above the 786. So I'm assuming here that we should wait a little bit on the corn to see if it's going to, make it on a bigger, for holding it for a little bit of a longer time frame. Now, what's interesting in the corn is that when it was making that high at that time, we were also looking at the high from 2008, and you can see that it made a huge double top up there at that level of $7.80 a bushel. So these are things when you're looking at it technically that show you that there was supply way back in 2008 at $7.80 a bushel, and then when you came into 2011, again this supply showed up at that level, and now we're in the middle of a pretty good correction. So we'll see if we can take a look at it. But I wouldn't touch corn here. It doesn't, it's way below the 786, and I would, prefer to stand aside. If I had to, have two trades that I would be looking at, the silver, as long as it can hold above that 28.15 per ounce level, that looks like it's, pretty good to me. And then also the sugar, and I only trade sugar probably 3 or 4 times a year, but we are looking at it right now. In fact, we're in it right now, and so we'll see if it does hold up. And we'll be back after this. Take a break here to pay a few bills. 877-927-6648.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before December 31st from your local Barnes & Noble store. And you will be given access to not just 1, but 2 exceptional archived courses. Tiger Scaling, the Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you have until December 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game, risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Go long, America! Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system. Before December 31st, you will receive in excess of $300 in trading education. Now, back to the Futures Hour.
Okay, we're back, folks, and we've got a call from Rick in British Columbia. Are you there, Rick?
Hey, Larry.
How are you?
Where are you, in Arizona?
Yes, I'm in Arizona, cold Arizona, 28 degrees at night and 55 during the day. This is as cold a streak as we've ever had. We have tourists leaving the town faster than they come in.
Well, anybody that's along the UNG isn't feeling sorry for you right now.
Okay. What can I do for you today, my friend?
RTH.
Okay, that's the ETF for the retail industry?
That's correct, yeah.
Okay, I posted it into the Tiger TV, and it looks like we've just made, about a week ago, we made 3 drives to a top on the past 5 or 6 weeks. We've also completed a major double top from last April. And, we have to get above this 115 level very quickly. Otherwise, it looks like, this market has a pretty good ways to go to the downside.
Well, from a fundamental point of view, too, pretty well all the numbers have come out, and when is the best time, like I think you mentioned that once, or somebody mentioned Amazon was like that. It would just scream during Christmas time. Same thing with these stores. Come January, there's going to be probably 50% less shopping done, you would think, with Christmas, right? Mm-hmm. But that's just a fundamental point of view. But, I put it on an hourly, and just today's volume is just absolutely anemic, like sick, And so anyway, that's kind of why I phoned you, that's all.
Okay, well, it looks like that's what it is I don't know anything about the fundamentals, but it's made a 3 drive to a top pattern. back on the day when we hit the full moon, and now it looks like we are heading down into the new moon, which I think will be on the 24th. We'll see if it continues to to work that way. But
right.
I've never traded this. I know very little about it, except just looking at the chart. It looks like it's made a major double top up in this area.
And Larry, real quick here, your date is what, Boxing Day or something like that? Some kind of a date?
No, it's actually the 24th. It's Christmas Eve.
Okay, because I haven't looked lately, but I think the Bradley model is the 28th, and I don't know why. And that was one of 3 major ones of the year. Like they list a bunch of them, but that one is one of 3 that we've already had a couple earlier in the year. So I just thought I'd mention that.
Yes, thank you very much, Rick, and happy holidays to you also.
You too.
Okay, thank you.
Bye-bye.
Okay, for those of you that might not know, I think Boxing Day is the day after Christmas in London, as I recall. So we'll have to wait and see. I also posted the chart for wheat in the Tiger TV today because we were looking at corn and the DBA, and the DBA is part of the wheat. The wheat contract looks like it might have another 20 cents to go or 25 cents to go to the downside. That would affect the DBA a little bit, but not that much because all of these are weighted, and it's certainly not. It's not the same as if you have an ETF like for cattle or something like that. This is one that is it has a whole lot of different things in it. But remember now, folks, if you're in the silver and we go below $28 an ounce, you do not want to be in the silver. Because we are in major downtrends in these things. Just because the 786 held by a little bit, it means a little bit. If we can get it moving to the upside, it would mean a lot more. But frankly, it's still very, 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 very early in the game. If you bought the SLV, don't risk more than, at the very most, 40 cents. You could probably even risk a little less than that if you like. But 40 cents seems to be a relatively small stop. That's very, very small compared to, what you could possibly make on it. But remember, these don't work all the time. And believe me, I get the emails from everyone telling me all the times that I'm wrong, and I appreciate that. But I do have words for the guy that didn't like Santa Claus yesterday. Go watch the movie by Bill Murray, Scrooged, one more time. Happy holidays, folks, and I'll see you on Monday for Christmas week. And it'll be a thin week, but it should be a lot of fun.